And this is not an investment. We run a portfolio. This is people's entire life savings and their future hopes and dreams.
Yeah.
We've never seen anything like this. So the way at which people become kind of cult heroes within that community, people were crying when CZ was on stage.
Yeah.
Right? So this is a movement much bigger than most people understand. People who are in traditional financial markets, they don't get this, but this is a much bigger thing because people have been gifted an asset that goes up 150% a year, including like 3 or 4 70 or 80% drawdowns. Yet it changes everybody's lives.
Bitcoinzilla stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoinzilla today and enjoy the new edge. Raoul Pal discusses the most pressing and trending topics in the financial world. Watch to dive deeper and stay ahead.
To explain the exponential age, it's this extreme exponential adoption of these technologies, whether it's AI, whether it's crypto, whether it's EV, whether it's robotics, whether it's space, all of these things. And they are all on a log return. So they're exponential. If you look at price charts. So that is the game we're playing. Those exponential assets, if you think of Amazon stock, back in the early 2000s, it fell 97%, it went up 600%, it fell 50%. They're volatile.
Yeah.
So they're volatile assets, but if you can hold on to them, the returns are truly extraordinary. This is why Jeff Bezos is the richest man in the world, or close to it. And, it's all the same thing. So that is the mega trend. That's the exponential age. Within it, you have the business cycle and the liquidity cycle that drives this. So what you find is you need to understand where you are in that cycle. That cycle is driven by liquidity flows, let's say. And recently we had liquidity tightening from a strong dollar and higher rates in Q4 2024. That has a 12-week lead into assets. So assets fell because liquidity had tightened then. Liquidity has been doing the opposite now. It's been easing massively. And so price should follow. But the volatility is big, right? People don't realize is, you're used to a 10% being a correction in the S&P and anything above 20% is a bear market. 20% is an afternoon in crypto because it's highly volatile. It's a 70 vol asset versus a 15 vol asset. So it's much more volatile. So the idea is you need to be able to understand how to navigate the volatility. So what we call the banana zone, what is that? That's the accelerated point in the cycle where prices go exponential. It's usually at the latter point of the business cycle. And that's the kind of zone we started. We had the big leg up Q4 last year. We've had a corrective period, and then usually we now shug up for the rest of the year in a way that makes it quite hard to even buy, with a couple of sharp corrections en route just to gut check everything.
Yeah.
Anthony Scaramucci couldn't hide his excitement when Philip Laffin, founder of Kochu Management's $15 billion tech hedge fund, announced he's warmed to Bitcoin at Coinbase's State of Crypto Summit. Scaramucci praised Laffin's shift, calling Bitcoin the greatest generational investment now that volatility has eased and mainstream support is growing. Laffin admitted he sat on the sidelines for too long, spooked by wild swings, but now embraces Bitcoin as a legitimate portfolio asset and inflation hedge. He recommends a modest 3 to 4% allocation to keep anxiety in check and lamented missing earlier gains, a mistake Scaramucci says new investors can still avoid. Laffin described 3 client archetypes: dedicated followers trusting his decisions, remorseful patrons who missed the rally, and the dwindling few still too wary to touch crypto. Scaramucci remains undeterred, forecasting Bitcoin could surge to $500,000 amid unchecked government spending and reminding everyone there's still time to join the party.
Well, now we've established that we're in this exponential trend that is driven by the business cycle. It's a 4-year cycle driven by the debt refi cycle. We're in the last year of that, which is usually one of the best parts of the entire cycle. It is going to be volatile throughout that period. So then my job is trying to communicate to people, okay, if you've been given the greatest performing asset of all time, then you don't want to screw it up.
Yeah.
And it's hard because most people aren't used to volatility. It becomes emotion. And emotion doesn't help you in this. It'll force you to do the wrong things. So I try and explain to people, firstly, don't use leverage. It always looks great because you see some guy on Twitter who's made 100x returns and he's done it in perps and he's done it. It's like, it's never going to happen. You are going to lose your money. Because rule number one is don't lose control of your tokens. Because really, you want to hold it from here and you want to be Jeff Bezos here, right? And he didn't lose control of his equity. You don't lose control of your tokens. So that's really vital. It's also, don't FOMO, because you'll find out you'll end up buying at peaks and selling at troughs. That's the emotional side of things. Also, expect 30 to 40% pullbacks often and think of them as normal. And if you've got cash, that's when you buy more stuff. So it's like having this mentality. It's also be careful not to lose your tokens because you get hacked. So store them on a ledger system somewhere.
Yeah.
Keep a cold wallet. Just simple things like that will stop you losing your tokens, stop you, even you FOMOing in fear, selling out, panicking, or bull market buying too much. If you don't do that, you'll lose control of your tokens. Again, just don't lose your tokens.
The basics.
And just hold it from here, and in 5 years' time, it'll be here, and in 10 years' time, it'll be here. And people don't believe that's possible, but this is the gift that keeps on giving it. It's the same with NASDAQ.
Yeah.
Right? Tomorrow will be more digital than today. It's a simple fact. So will tech stocks over time do well? And everyone goes, yeah, but they crashed in 2000.
Right.
Okay, well, we had a massive bubble in tech stocks then. You pay back for a year or two, but anything you bought into that crash was Amazon, Google, Apple, all of these things did stunningly well. So people just have the fear of what's happened in the past. But we know this tech adoption curve is not going to stop. In fact, it's increasing. So the probability is, even if you have a bear market, which we had in 2022, it lasted 1 year, 9 months. 9 months, it bottomed out with liquidity, and it's been up ever since.
Yeah, it's the time invested.
That's right.
Time invested.
Time horizon is a really important thing.
Raoul Pal has turned heads by revealing that a staggering 89% of Bitcoin's price action over the past 2 years can be traced back to the global money supply and to expansion. His chart shows Bitcoin riding a wave of rising liquidity ever since it crossed $40,000 in 2023, moving almost in lockstep with trillions of new dollars injected into the economy. Pal argued that once you see this powerful correlation, all the hype, headlines, and wild narratives suddenly look like background noise, and that Bitcoin's true story is one of debasing the US dollar. Last Friday, Bitcoin's price swooped down over 4%, tumbling from above $108,000 to around $103,000 in response to escalating tensions in the Middle East. A brief rebound pushed it up by 2%, only for another pullback to follow. These sharp swings remind us how external shocks can still rattle even the most liquidity-fueled rally, underscoring the market's sensitivity to geopolitical events. Adding fuel to the conversation, Anthony Pompliano has dubbed Bitcoin the new bonds, suggesting that once investors view it as a fixed supply asset akin to treasuries, everything starts to click. With talk of U.S. Treasury bonds backed by Bitcoin and a strategic Bitcoin reserve holding nearly 200,000 confiscated coins, the narrative may be shifting from speculation to serious monetary innovation. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.